All right. Hello. Hello, hello, hello. We are live and well, we've got a pretty interesting live today because today is the day that the market might be pivoting into a day that is a better day for humanity. It's not because anything uniquely changed in the course of humanity, but it does mean that something interesting happened. And that thing that was interesting that happened was that CPI came in at 7.1, which is awfully close to 6.9. We are getting inflation down, ladies and gentlemen. Dex, good morning. James, good morning. Cash King, good morning. Marco, good morning. Are you in a closet? What happened to the apartment studio? I just decided, hey, I want to switch up the thumbnail. Let me go to the apartment. That's why I look at a thumbnail in the apartment or in the closet. That's what I did. Why is he in the closet? He's I went to the closet to get you guys to ask these questions because I was like, the thumbnails are getting a little boring. Let's do that. Dude, what's this intro? Super philosophical. Hello, hello, hello. Gabe. And today's the day that it all gets taken away. Look, Gabe, I don't know, man. As of now, it looks like the market's up. However, I will say we're about to get into CPI. I wouldn't buy the dip. I wouldn't buy this news. I mean, like, this obviously seems like a bear market rally. Seems like the market's happy, but it is very hard for me to believe that this is going to extend itself to get the S&P back up to 420, for Tesla to go back to 200. Like, and this is not me being a bear. It's just more so me being like, it's good news because it's a decrease, but it's 7% inflation is nothing that, even 5% inflation is nothing that we're going to be happy about until we get to like 4, 3, which might take another 18 months to get to. But if we keep going down like this every month, we went from 7.7 to 7.1, that's 6 basis points or 0.6. If we do that for the next 5-6 months in a row, we're going to be very close to 4. Yeah, we're going to be at 4. That's going to be easy money. That's going to happen by March, April. So the rate of decrease of inflation, I think, is incredibly important to understand. And we'll see if we get there. Got to be in the garage next thumbnail. Yes, literally, that's what I have to do. Harshit, thank you for being here. You said, good morning. Why do you always wear a cap? First of all, Harshit, I love your profile picture. You seem very professional. I don't wear the cap because I'm like ideologically tied to it. It's just because my hair in the morning is a mess. I can take it off and do the morning open like this. Yeah, it's up to you guys. It's just whatever you would like. So that's the only reason I wear it. Shave that shit off your face. Oh man, you sound like my mom, bro. She also wants me to do that. The problem is I like the beard, and there's some people above the opposite gender that also enjoy the beard. So that's why I keep the beard. All right. So CPI inflation obviously has come down dramatically. Let's go into an article. Let's discuss a little bit about it. This is great news for the economy. The problem is, earnings are still a bit inflated. S&P still trades above what it should be. And when we talk to forward price earnings, so there's a lot of indicators that this is nice, but it's not going to stop us from getting into a bad economy. I think there would have to be some other external factors for us to see if or this could theoretically just mean we get to a softer landing, but it doesn't necessarily mean we avoid a recession entirely. So consumer price index just rose 0.1% from the previous month, increased 7.1% from a year ago. Core CPI rose 0.2%. Stocks have roared, hiring following the report. Inflation-adjusted average hourly earnings for workers also rose 0.5%, though they were down 1.9% from a year ago, which means like even though wages are up 0.5% compared to last year, 2021, they're down 1.9%, which is technically good because you don't want workers making more money because then they have more money to spend. Okay. So we have a couple things here. Excluding volatile food and energy, so-called core CPI rose 0.2%. The reason they exclude food and energy is because, again, they are very volatile and they mess with the numbers a little bit. 6% on an annual basis compared with the respective estimates of 0.3 and 6.1%. Falling energy prices. I think this is one of the biggest elements about keeping inflation at bay. And I'm noticing this in my gas prices, and you guys probably are too. Like, gas is falling precipitously. By the way, none of you, a shame on all of you, you have not kept me accountable to my word of the day. And Amit, I think you look amazing. Thank you, Emmanuel. I appreciate that. I said 2 weeks ago we're going to do a word of the day, and no one has kept me accountable to saying what's the word of the day. And I really, this is your fault because you can't expect me as I'm doing the market open and trying to analyze very complex financial ideas to remember to give my word of the day. So next time in the morning, someone has to mention, hey, Amit, what's the word of the day? Today's word of the day is, going to be fiduciary. Fiduciary. The reason is that because I looked up word of the day and Merriam-Webster said fiduciary. Fiduciary, for those that don't know what it means, is a financial responsibility. So the Fed has a fiduciary commitment. Not really, but like they're not like a financial advisor, but they have a commitment from a fiduciary sense to bring inflation down so that we could all make money. That's technically not the case, but nonetheless, it would be nice for them. Okay, so that's the word of the day. Make sure you use the word of the day in a sentence in some capacity. And when you do, you'll think of the morning open. Falling energy prices. The energy index declined 1.6% for the month, due in part to 2% decrease in gasoline. Food prices, however, rose 0.5%. We're up 10.6% a year ago. Even when its monthly decline, the energy index was higher by 13.1% from a year ago. So energy still is up 13.1%, even though with the decline. But it's helping to keep it at bay. Shelter costs, which make up about 1/3 of CPI weighting, continue to escalate. The easing of inflation pressures help give workers a lift after months of seeing wage increases as well. Inflation spiked in the spring of 2021, the result of converging factors that took price increases to their highest levels of stagflation days of early 1980s. Among this, Russia's invasion of Ukraine. So a lot of different things impacted how we got inflation. Used vehicle prices, this is another one, which had major contributors to the initial inflation burst, fell 2.9% for the month and are now down 3.3% from a year ago. This is the thing that Kathy has been speaking about for a while now. And either she, is going to be right on this thesis or wrong, but obviously I think she's correct on the thesis that will lead to some level of deflation. The question is if that's going to lead to this massive deflation that's going to change everything. Miyoko, hello. Is this rally worth holding, though, or a good time to sell and cash up? Well, that's the existential question. Gun to my head, I would say it's sell and cash up. I do not think this is worth holding, given everything that, like there's no part of me that's like, yeah, this is a great rally to worth holding. But that also just means if you're going to sell, you want to time the market, and it's just how comfortable you are in actually trying to time the market. Oh, you mean like a financial word of the day? No, it doesn't have to be a financial word of the day. It's just, it could be any word of the day, but fiduciary was the one I used. Use the Max screensaver word of the day. I don't like Max. I tried Max. They were never exciting to me, so I don't use Max. Let me open up Webull. Respect to anyone that has a Mac. For me, I kind of hate them. The TMF calls are printing like mad today. I bought them for 0.05 and I just made a 10x. Wow. Glitch Life, you need to start a Patreon so we could we could get some of this financial fiduciary advice. See what I mean? See what this is called? This is called implementing your own ideas. All right. So S&P spiked up to 40 what? What does it go? 40. Wow, 410. Goodness gracious. Last time I saw it was 407 when I woke up. 410? Woo! That's a big one. Meta at 120, Coinbase at 46, Tesla at 174. Tesla had a new all-time low yesterday. This just goes to show, honestly, that when it's time for stocks to rip, they're going to fucking rip, bro. Like when it's time for stocks to actually, like, in 2020 when every day there was like another 10%, 5%, blah, blah, blah. Like when it's time for us to rip, and no one knows when it's time. I definitely don't think it's now. I definitely don't think it's in the first couple months of 2023. But when it's time, those that have accumulated some positions at 167 on Tesla, they might get rewarded. Now, could Tesla drop even lower? Could Palantir drop lower than the 697 that it was the other day? Yeah, and that's the hard part about being an investor. Like you don't freaking know when it's going to happen. But it's days like this that remind you, look at this, end phase at 331, of course. It's days like this that remind you that when it's time for the market to go, the market's going to go. The market doesn't give a fuck. Because at the end of the day, investors are betting on America. They want America to win. And it's just a question of when that happens. Snowflake at 160. Goodness, this is a green day. This is a green day, which might be a day to buy some puts on some stocks that we think may be overvalued, like Snowflake. I might be too much of a little bitch to buy the puts, but nonetheless. All right, December 13, 2022, 9:30 a.m. The stock market is now open. You know, my sister is home from work this week, so I wonder if she heard me. She's in the other room. She usually doesn't hear this. Anyway, wake your ass up. S&P, look at this bad boy. 409 up 2 points. And again, 2% on the S&P on an index matters. Meta, 121. Microsoft, 262. Tesla, 174. Toyota up at 144. UiPath, $14. Where's Spotty? Spotty is, look at this. Spotify is stuck at like 73 for the past like month. Now it's up $84.88. Roku's up. Where's Arc? Arc, I would imagine, is at 37, 36, 37, 37.88. There we go. There is Arc right there. Wake your ass up. Palantir ripping. Hell yeah. Made it for the bell. My day's complete. Ty, I appreciate you. You aren't going to think it's the bottom when it's the bottom. Yes, but this little rally. All right, put it in the chat. Do you guys actually think this rally is a rally that's sustainable? Do you really think, like, because I think the far majority of you are smart enough to be like, this is not time to go to the moon. Like, I don't think anyone thinks, yeah, we're gonna get to 430 on the S&P. This is the time to go to the moon. You know, we have no concerns. Like, I just slowly by surely this. Look at this Nvidia. Nvidia's about to hit 200. Like, it's approaching 186. Nvidia was 109 the other day. Hold on, where Nvidia was at 108 in October. And then it was stuck at 130 for the far majority of November, broke out to 150. Now it's up to 180. Like, if you bought NVIDIA on October 8th, October 13th, you are almost up 100%. Let's do some quick maths. I wish I could do this in my head. That would be really cool. Okay, 186. If you ever want to find percentage change, you just divide the closing price divided by the old price. 186 divided by 108. If you bought at the bottom, you are up 72% on your investment in this economy in the past 2 months. I mean, that's a lot, man. I just don't know if that's sustainable in this market. Netflix is up 326. NASDAQ, look at this, rallying right back up. It's like right into the mid 11,000. SoFi, of course, SoFi freaking stuck, barely is moving up. 5% is okay, but like can't get past 5. Ulta Beauty, of course, we did some analysis on that. One of the best stocks to hold over the past 5 years, 478. Zoom at 77. See, this is sad, right? Like, on a day when stocks are mooning, ARK's core positions, Zoom and Roku, are just like stuck and just like, again, ARK says this bad boy is $700 bear case 2026. It's just, when you say stuff like that, man, it's hard. It's like my prediction on Palantir being 250 by 2030. I did a whole hour and 30-minute video explaining what metrics need to be hit, which is 36% year-over-year or 35% year-over-year growth, 36% adjusted operating margin, and less than 3% dilution year-over-year to get to that 250 price. But it's not it's hard, but at least there's some numbers there. For Zoom, they're going to print $70 billion in revenue. It's like, okay, how? 74, S&P at 408. That is the question now. None of you guys believe it. Okay, come for the capital, stay for the Palantir. Yep, Amit, check out Rivian. This rally is sustainable. The rate hikes won't hit the eccentric for at least 6 months. Yeah, I think even if rate hikes start to slow down, the question becomes if the market is going to give this if the market is still going to give it sustainability long term. You guys said no. Most of you guys said no. Glitch Life. Just a reminder, the Fed's rate hikes have not hit the market yet. This rally had likely has some legs, but we were going to retest lows next year and things finally starting hitting the market. Yep, I agree. So that's why it's fun to be excited today, but it's not like it doesn't make a lot of sense to keep it up, you know. Okay, let me pull up. Let's go to the talking heads. Let's see how. Oh, by the way, Sam Bankman-Fried, the dude got arrested. The dude got arrested. First, let's hear Cramer talk about inflation. And then we'll get into that. I forgot to, I'm sure you guys know this by now, but Sam Bankman-Fried is officially arrested. Let's hear what Cramer has to say.
Your thoughts on this number, what it means for stocks, what it means from the Fed?
Well, I think that not much wages here, but almost everything that fell is going to continue to fall. A lot of things that are in stasis or about equilibrium are about to fall. There isn't anything in here that indicates that something is too low, except for maybe airline fares, which fell 3. I think that could go up, but I mean,
you're talking inflation numbers, not stocks.
Yeah, everything's going the Fed's way in these. And, you know, I look at the individual companies. I know that food prices are going to come down. I know that energy prices are going to keep coming down. I know that the supply chains for the home builders are now in pretty good shape. I know the supply chains for the for the auto companies are in much better shape, not just the used. So I didn't expect the medical index to fall. That was a nice surprise. And then apparel is going to crater because there's so much inventory in the system. So I see most of the things going the Fed's way, except for wages. We don't have that yet. And we need to see more people, unfortunately, be laid off. But this is a remarkable number. But what it's really doing is it's all the cumulative stuff that they've been fighting that is finally working right. And the collapse of energy is very important. The index for natural gas has to keep falling. Look, it's just a really solid number. I don't like to look through it because I deal with all the companies that are making this stuff, and they're not putting through price increases anymore. That's over. If anything, they're going to have price decreases because of outfits like Costco. They'll say, you're charging too much, and we're rolling things back. So, yeah, I mean, fruits and vegetables is higher because there's a cartel that keeps those up, and the government has to investigate that. But most these things are really good. And again, remember, I'm coming in from the company side. I don't care about these numbers. These numbers verify what the companies are telling me.
If you're coming at it from the company side, if costs are coming down, does that mean the earnings recession that so many people have been predicting doesn't come to pass this next earnings quarter?
Well, I think that you're in this weird moment right now where the costs are coming down to the consumer very slightly, but they're coming down big to the producer. So you'll still see some very good numbers. I'm not sure, but I think crude is trying to put in a bottom. But I don't think you're going to see a big increase by any means in gasoline. So there's just a lot of things that are in this that have been in the works, and they're finally coming to fruition.
Okay, so Cramer's kind of bullish, but not super bullish. He's talking about how this was in the ecosystem for stocks to ultimately, or for CPI to ultimately come down, given that prices were going down for the producer. He's correct about the consumer. Like me, I see prices going up every day when I buy stuff. And last week I bought a lot of like food because I was out all week. Because I had some family issues that I had to deal with. So I was just constantly running around, and I noticed like prices were getting higher, and it was like, all right, so this is a little expensive. But as it like, so CPI on the consumer outside of gas has not really affected me. I've like, we're at 7%. So prices are going to be naturally a little bit higher. When we get down to 5%, it'll be nice. The question is 2023, do we get down? If we move 0.6% every time, then the next one's going to be 6.5. Then we're going to have 5.9. That's February. Then March, we have 5.3. Then we have 4.8 by April, or 4.7 by April. If that happens, like, I mean, like summer 2023 is going to be amazing. The question is if the rate of growth is that to be possible to happen. So we are going to see on a technical basis, we are breaking out of a long-term downtrending channel on the S&P. That is true. The question is if this rally is still sustainable from just a tech perspective. We got better than expected. Yes. What's up, Scott? Thank you for being here. Palantir is going to rip as rates come down with CPI. S&P 500 is now above the 200-day moving average and now breaking the bear market downtrend. This is correct. The problem is if it's enough, like, let's go into the you're correct from that technical side of it, but there's other technical factors that we have to look to as well. And it's also a question of if inflation continues to, like, inflation's going down nicely, but I don't know if that trend continues. Like that's the hardest thing to predict about this guy. Like, imagine next month inflation goes up a little bit. I mean, that would change everything, right? And that happened back in August. It was either August or July when it actually increased a little bit month over month after having a nice decline. But the market still rallied because we knew 9% was like the peak. The problem is if you bought during that time, it's still like you could still be down from now. So like even if you bought during the peak, it's not necessarily the best. The market's already cooling down a little bit at 408 on the S&P. The number one argument to like the technical reason for a lot of you that are saying that the market's breaking out, like the S&P is breaking out of a technical channel decrease, is that the S&P is still trading 18 times earnings. And it's only supposed to be trading 14 to 15 times earnings. So if you give the S&P an earnings per share conservatively of $200, and then you give a 14 times price to earnings on that earnings per share, we would still have the S&P down to $3,000 or $300. And so like the question becomes, for the past 10 years, the S&P has been able to sustain this like elevated level of earnings, and justifiably, because tech companies have produced and tech companies, take up a majority of the S&P. They've produced massive profits, massive revenues, like, Apple, Amazon. These companies are up thousands of percents from 2010. The question is if that continues into the next decade, and if those types of technology companies are innovative enough, and if companies are willing to like give them business, if companies are willing to advertise on Facebook to the tune that they've been doing before. And if they're not, then company earnings are going to decline, even if producer prices are going down. And as a result, the indexes will decline, like, because earnings have to come down. And I think that's going to be the overarching question. Your mathematics skills is amazing. Thank you, LWT. I appreciate it. Amit, we just need the dollar to continue to fall and beyond on bond yields to continue to fall, cheaper rates, and then dollar denominator effect. That's one theory that could play out. I think earnings are going to be important over the next couple of months to see how it happens. I mean, because I think that determines a lot of investor sentiment as well about where the market's going, and especially the forward on the S&P. I just love how on a news event like today, everything goes up together. Strong company up, failing company up, literally minutes away from bankruptcy, up, totally rational. Yep. And that's why I was happy when I saw the market go up. And I'm like, all right, it's not like you're gonna just I gotta get in, I gotta start buying. It's like, no, that's not necessarily what it feels like. Let's take a look at Sam Bankman. The dude got charged by the SEC. Let's see how that's going. I mean, I was pretty surprised. He was supposed to testify today, by the way, in Congress through Zoom. He was gonna Zoom in, and now he's arrested. Like, he got extradited by the Bahamas cooperated with the U.S. Like, this is an interesting story how it's turning out. Let's take a look at this one.
We're now just recapping the news that just broke. The SEC filing charges against Sam Bankman-Fried. This is a case that they've been bringing, alleging effectively that he misled investors, not investors in FTX, the exchange per se.
Bro, look how this dude is walking, bro. Like, he walks funny, bro. If I ever get that rich, I need to walk like that, bro. Maybe that's the billionaire walk. Like, look at this guy walk, bro.
Meaning customers of the exchange, but this is a case being brought effectively to protect those that invested, the venture capitalists and others that put money into this company. That may very well be the limit of U.S. regulators, or at least the SEC's ability to bring a case. In this regard, we are expected to hear from the Department of Justice with their criminal case later today. The SEC saying that unbeknownst to those investors, Sam Bankman-Fried was orchestrating a massive years-long fraud, diverting billions of dollars of the trading platform's customer funds for his own personal benefit and to help grow his crypto empire. Within the context of the lawsuit, they talk about effectively an account called Fiat at FTX, where lots of money appeared to be coming into FTX that they realized should have been brought to one side from Alameda, in that it wasn't, and that at some point, actually, it appears that they're alleging that he actually not only knew about it, but knew that there was $8 billion in said account, and all of a sudden, because of the way they had moved into this account, the account was going to start charging them interest. So he had them move it to a different account so that the interest wouldn't be charged.
I mean, this is pretty clear.
There's a whole sort of series of allegations throughout this complaint. It goes on something on the order. I got to get you to the bottom, but I think we're about 28 pages.
28 pages look, this lays it out pretty clearly. They do think he was like Madoff. He was using customer funds to make undisclosed venture investments worth billions of dollars, lavish real estate purchases, and large political donations. That's where the money went. They said, basically, Alameda had a virtually unlimited line of credit that was funded by the platform's customers. That he lied to the customers about that. He lied to the investors about that. All along, he said that Alameda would not have any different, it would have no special privileges, but that was a lie, that they were taking all of those customer funds and doing what he wanted with it. And billions of dollars in these venture investments to be what remember at the time, people were calling him the JP Morgan. I never did, but people called him the JP Morgan of his era by.
That's right, Becky. You better protect your media reputation. Right? It's like, I never called him that bullshit. You guys did. Becky's like, yeah, I'm not getting fired for this.
Spending billions of dollars to buy all of these cryptocurrency.
This is an interesting one.
Into trouble.
Alameda was able to maintain a negative balance in its customer account in FTX. Bankman-Fried directed software code to be written in around August of 2019, updated it in May of 2020, that ultimately allowed Alameda to maintain a negative balance in account, untethering it from any collateral requirements. No other customer account at FTX was permitted to maintain a negative balance.
Let's talk about what he told you.
So
that he didn't know that this was
he didn't know.
Well, we'll see if the U.S. government prosecutes him. Look at this, everybody. Shout out to Joel for this comment. You made me check it again. Palantir is up 8% today. What a rip. Goodness. 8.2. Oh, by the way, Karp just did an interview. I'm going to do a video reacting to the interview. It's on Fox Business. So the video will probably be uploaded in like an hour or two because it's a little bit longer of a video. But in that interview, basically he was just, he said all the things he needs to say, but it was the Crisis 24 partnership they did. It's a risk management consulting firm. And they had the CEO. It's like the Hertz interview where they had both CEOs come on. And the guy was like, Palantir puts our business on steroids. That's what the man said. And then Karp, when asked about the stock price, because remember, Sham was asked about the stock price recently. And he said, look, we're in it for the long haul. And Karp was like, Wall Street just doesn't get it, my guy. Like he's like, Wall Street does not get it. And when they do, we will be rewarded. I had a bet with Vitali that I think that Palantir gives us a 5x way before, or it was a 3x way before Enphase gives us a 3x. Because he was thinking Enphase could give us a 3x at this level before Palantir. I'm like, I don't know, bro. I think Palantir from 7 to 21 or from 8 to 24 happens quicker than Enphase from 300 to 900. You know what I mean? Like I think that might happen. But yeah, it's ripping, man. Look at this, up 9%. Now, granted, it's probably going to be gone in the next couple of days. I'm not naive, but it's nice. Look at this. Spotify's up 9%. Everything is just doing really well. Not bad. Nice little green. It's nice to see a little bit of green. Where's the S&P again? S&P up 2.6. So S&P is struggling to stay at 410, but it's right at that point. Tesla up 3%. Elon Musk has been tweeting a lot. He does not care about what anyone thinks, and it's had an effect on the stock. But when the days are good, the days are good. And it's like algorithmically, you can't stop some of these stocks from just getting up there. Palantir taking over the world. Avis is starting to use Hertz partnership paying dividends. It's just a matter of time, in my opinion. It's going to take time, just a matter of time. But when it happens, it's going to be glorious. Like it's going to be glorious. Oh, so by the way, I have an announcement about Palantir. So those that know me from the OG days of being this YouTube channel know that I launched a website called dailypalantir.com. You guys also may know that website hasn't been updated since September. Why hasn't it been updated? Well, the reason it hasn't been updated is because at the end of the day, I'm one person and I'm managing a YouTube channel, managing a startup, which is like the number one priority for me, and then managing 17 other billion things that I'm doing. So I recently just got a team together. By team, I mean one person. And that one person is now going to help me manage the website. So we are relaunching it tomorrow. We have like 30 articles ready to go. We have a bunch of stuff. We have an infrastructure, a system set up in place so we can be consistent. So that's going to be relaunching on Wednesday. If you're part of that newsletter, that'll be relaunching as well. And so dailypalantir.com will be back. I've really been meaning to get it started over the past couple of months, but like it's just been hard. I've been obviously doing coverage. It's just been through YouTube and podcasts and ideas. Making those into articles, it takes a lot of time if you've ever written an article, especially if you want the article to be somewhat good. So we figured out a system. I got someone to help me. And so now Daily Palantir will be launching and we'll be doing that. Let's go to Twitter and let's see what Elon, well, actually, let's go to my tweet and let's see some responses to that tweet. Solar is a bubble. Vitali going to regret saying an Enphase. Yeah, Vitali, there's no way you're going to get him to regret. He loves Enphase. I said CPI goes to 7.1 and stocks are ripping. Gabe responds, Jerome Powell will change that sentiment fast tomorrow. If people think that a sudden Fed will say, yeah, 7.1% is good enough, let's stop raising rates, they are delusional. Institutions are not buying here. It's all dumb money injections. So Gabe's got the puts and he's ready to make some money on the downside of this. Let's go to Elon Musk. Let's see if he's tweeted anything. Elon Musk. He has said, well, he's getting rid of bots, apparently. I've noticed there's less bots, but I don't think I have that many bots, but he's noticing there's less bots. Someone said, haven't we Tesla and investors suffered enough already? If you abandoned us, it would have been better if we had burned like the others in the fire that destroyed FTX. Then we started weeping, and still the Lord looked away and took away his daily opponents, the tribe of bots. And then Elon tweeted this formula. I think this formula is kind of just saying, bro, relax, give it some time. We'll be fine. So we're good. Yo, Glitch Life, if you want to be on the team, bro, message me on Twitter. I'm so down. Like, please, we need more people. If you can do an article a week or 2 a week, I'm so down. Get you on and you'll get paid for it too. So yeah, you will get paid for it. So definitely hit me up. Let's get that set up. I would love, if anyone wants to contribute on dailypalantir.com, please let me know. If you think you can write an article a week, email amit@dailypalantir.com if you're interested. It should be like, what, 400 to 500 words. Try to make it interesting. Talk about something unique. It doesn't have to be relevant news. It could just be talking about carp's eccentricity, like literally anything. We're just trying to get the website. I think that website can get like 1 million views a month, to be honest. Especially when the share price increases. I think there's going to be a lot. There's already people going to the website, and like I don't even post on it. And I'm like, how do you find this fucking website? And they just find it through Google, because like Palantir is a search word that people care about. And when the stock price increases, I think a lot of people are going to care about it. So I think that website is going to do very well in the future. But we need to keep it alive, right? And so I've neglected that the past couple months, but we'll be back to doing that. All right, let's go back into CNBC and see what they're talking about. Today, I'll say this at the end of the stream. I have something to say, but I'll say it at the end of the stream, which will end in about 5-6 minutes. Let's hear what do we got? Let's hear this. 4 people react to November's cooler than inflation expectation. Let's see what they have to say. I can write a couple articles a week. I've done it for travel sites. All right, if you're down, it's like, let me know. Anyone who wants to contribute, you guys are down, just let me know. All right.
Expected cool. Was it cooler than you thought, Neela?
Look, I expected cooling goods sector. I did not expect cooling in services. It's because wages have been elevated and they're staying at accelerated levels. So we haven't seen a cool down in the labor market. And the Fed is pointing to 3.5 missing workers. Joe, what gets these workers back? Because the competitive pressures that are lowering prices in the goods sector are working in the opposite way in the services. There is still demand for headcount, and firms are competing with each other, which is raising wages. And that's the issue before the Fed when it meets on Wednesday to really make a decision.
And Tomas, do you think that is a long running issue, or is it still a one-off from emerging from the pandemic? Is this deeply ingrained in the labor market now?
Well, I think there's kind of several deflationary measures that people kind of don't talk about a lot that is coming in. I mean, we have a month-to-month now of 0.6, 0.6, 0.3, and 0.1 in core, which is very, very good, obviously, but there's sort of some deep deflationary pressures out there, I think. Obviously, the money supply, which people don't talk about at all, but if you think about money supply with lags, that's exactly what's going on with the explosion 2021. Then we got inflation, and now we have inflation coming down because money supply is completely dried up, obviously.
And he's talking about quantitative tightening there, right? As we're taking out $95 billion a month from the economy, that naturally is going to decrease the money supply and tighten things up a little bit more. And supposedly, theoretically has to get rid of inflation because there's less money there. So the value of the money that's there should go higher.
Obviously a year ago. So I think that's one. The second is, this peak of this excess wealth that consumers, we had a huge income growth in COVID, more than any boom, essentially, if you look at disposable income. That income is now dissipating. Obviously, we're 1.5, 1.4 trillion in extra save. That runway is coming off now because people are in real spending going up and real wages going down. That can't continue. So that's coming down. And then you have some supply measures that the government put in to stop labor supply, not shut down, but limit labor supply, I should say. The main one in dollar amounts is the Medicaid subsidies that went out in the middle class so that people didn't need to take a job to get health coverage. And those are kind of running off too, which put downward pressure on prices once we get labor supply out as well.
All that. You've been pretty bearish, and you really think the Fed's going to have to go much further That was already up back in a bull market. Does anything change your mind here? Are you still a seller?
Well, it's not necessarily just the destination, it's the duration of how long that they stay tight. And if we look at what the bond market is pricing in, it's a really rapid shift to rate cuts starting in the second half of 2023 of about 50 basis points, and then a full 200 basis points by the time we get to 2024. And given the fact that we're still seeing some of these underlying inflation drivers be tight, core services ex shelter still came in at 6.8%. And that's about in line with where we're seeing with wages. Atlanta Fed wage tracker is still running at 6.4%. That kind of environment does not support the Fed pivoting to cuts in very short order, which means upward pressure on yields and likely downward pressure on valuations for the equity market.
That's a fair point as well. Shelter is one of those things that's an underlying driver of inflation, coming in at 6.8%. The idea that the bond markets are factoring in that the Fed will pivot by the second half of 2023 and then start to actually decrease, which closer to 2024. It's rather unlikely that happens unless there is a precipitous decline of inflation at the tune of 0.6 basis points every single month. Because if that happens, we're going to get to 3% very soon by 2023. Like, it's going to happen. It's just most economists have said it's going to take 18 months for this to happen. So it's not going to happen that fast. So something like shelter and energy, both, and food prices are all going to have to really start to decline along with the other external factors that make up inflation in order for us to see that. And we'll see. We'll see if that happens. Okay. That's it for me today, everybody. Thank you so much for being here. I am headed to a funeral for my grandpa. For those that weren't here yesterday, I announced that he passed on Sunday. We are cremating his body. So we are burning his body. That's what we do in the Indian culture. I've never been to a funeral before, much less a cremation. So this is going to be an interesting day to see kind of how this goes down. But yeah, I appreciate all of you for being here. Appreciate all of you joining the morning stream. I appreciate this kind of a little bit of a family, that we got 280 to 300 people every morning. So it really means a lot to me taking the time out of your day to listen to my thoughts and, giving me a little bit of your attention because you enjoy some of the stuff I'm saying. It means a lot to me. So thank you all for being here. Some more videos coming out today. And yeah, we'll be back on the grind tomorrow because the grind doesn't stop. Market open tomorrow, 9:20 a.m. Thank you, everybody. I appreciate you. I'll see you tomorrow. Bye-bye.